Welcome back. Thank you so much for staying tuned in. Well, HDFC Bank is all set to report its Q3 earnings. In fact, we do have Gorwth who's standing by with an update on what exactly is being penciled in then.
Well, yes. When we look at HDFC Bank's pre-quarterly updates, we have already seen that loan book growth was at 3% on a year-on-year basis. But let's not forget that within that, corporate and other wholesales grew almost by 2.8% on a sequential basis. When we talk about deposits, we saw a growth of around 16%. But even within that, CASA degrew almost by 1.3% on a sequential basis. And now with this, brokerages flagged off that we may see some pressure on net interest margins because of the high bulk and term deposits, and at the same time higher sequential growth in wholesale banking. With this, when we talk about numbers, now brokerages are expecting net interest income to increase almost by 8%, while PPOP and PAT can increase at a rate of around 5% on a year-on-year basis. We may see some moderation in net interest margins, but they're not expecting a big moderation. They're expecting 1 to 2 basis points of moderation on a sequential basis. On the other hand, when we talk about asset quality, they're not expecting any kind of concerns from HDFC Bank. They're expecting credit cost to remain somewhere in the range of 0.5%, while cost to income ratio can moderate, which can support PPOP growth. On the other hand, any kind of commentary on net interest margins is going to be a key thing to watch out for, and at the same time, gross slippages are expected to rise, but any kind of commentary on the asset quality side is also going to be something important in this quarter because of the agri stress which we see in Q3. But definitely, all in all, good set of numbers are expected from HDFC Bank with focus more on net interest margins in this quarter.
Let's see how this one spans out. All eyes on HDFC Bank numbers today. Thanks very much, Gorwth.
If you like this video, then like, share and subscribe to ET Now.